The following is for information purposes only and should not be considered investment advice. All opinions and views expressed by the contributors to this podcast are in a personal capacity only. They do not represent the views of Progressive Equity Research or any other organisation mentioned in this podcast.
Hi, Jeremy. Friday the 31st of May, an interesting week. Anything in particular caught your eye?
Yeah, morning, Gareth. It's been a short week, but a lot going on in the UK, I'd say. First thing to mention probably is actually in the US, the GDP figures were probably the most consequential macro figures this week, which showed a slowdown in the Q2 GDP growth rate for the US from an expectation of 1.6% to 1.3%. And as we know, most measures of inflationary pressure remaining above expectations. I think we have had headlines, and we'll get them increasingly now, about stagflation in the US.
Yeah, 1.3 against 1.6. That's quite a miss, actually, isn't it?
Well, yeah, and that was from the previous quarter rate of 3.6%. So the Western world seems to be converging on a growth rate of approximating 1% or just below.
Yeah.
And that's something to conjure with in terms of currency markets and relative valuations of stock markets too. So within all that, I think the UK continues to be seen in an improving light. You know, no sooner had the general election been called last week than within a period of 48 hours, the UK equity capital markets priced up about £8 billion worth of equity. Admittedly, nearly all of that was the rights issue from National Grid. But we've had a steady flow of primary and secondary offerings to the UK equity market. Obviously, National Grid rights issue. There's a Great Portland Estates rights issue. And there's been a number of secondary deals. The founders of AJ Bell decided to sell a slug of equity, but there's been a consistent trend in I think that you've noticed as well. It's quite a long list of smaller companies who are taking the opportunity to raise capital, and the UK market is responding well.
The capital's certainly there. And yeah, you're right. I mean, we've had a couple of very big fundraisers, a number of management teams choosing to sell shares or effect transactions, probably tax driven, I'd have thought, in a number of cases there.
Yeah.
But you're absolutely right. There's been I wouldn't necessarily call it a flurry, but there's certainly been a resurgence in activity in the small and micro cap space, raising new capital for their own businesses. I've got a list of 10 here in the last 7 days. Companies called Scene, Cambridge Cognition, Gene Drive, Insig AI, EQ Tech, a little business called Mining Minerals and Metals, Ensilica, FRP Advisory, which is a bit bigger, Pennant, and Surface Transforms. They've all raised money in the last week, not necessarily huge amounts and not necessarily transformative in each case, but interesting to see. And definitely it's clear that where there are companies looking for capital, the UK market is open again, which is great to see. And yeah, as you said, the narrative for a long time now has been pretty negative on the effectiveness of the UK markets or their ability to provide capital where it's needed or where it's deserved. And it certainly seems that that's changed pretty quickly.
Yeah, definitely. The popular narrative a little while ago was that the UK market wasn't fit for purpose. I imagine a number of those companies you mentioned have been waiting a while to raise fresh equity, and it's good to see that the market is responding in this way.
No, it is.
We've also had this week an agreed offer for IDS, the owners of Royal Mail, from Czech Sphinx, run by Daniel Kretinsky. So they've agreed a cash offer of £3.70 a share. Stock market doesn't seem to believe it. It's trading at quite a big discount to that level still.
Okay.
I think it's interesting that, you know, you've got a national monopoly industry, a critical part of Britain's infrastructure, if you like. Certainly in the day it was, which could be going into private ownership and in the early stages of an election. And it doesn't seem to be raising much in the way of commentary from our politicians, which I think is quite interesting. But not quite sure what to make of it. But it looks like he is a very determined buyer of that asset, and the plans he has for it seems to be making a lot of sense to the wide number of stakeholders in that business, including the unions, I gather.
Yeah, I'm sure it's quite a political hot potato. So maybe the politicians are worried about it, or keeping their focus on other things at the moment, trying to avoid howlers. But yeah, you're right. It's a major national asset, and it's interesting to see how little attention it's been getting. Yeah, I think that's absolutely fair.
And still in the UK, I noticed today we had nationwide house price index, which showed that house prices in the month of May in the UK increased by 0.4% against expectations for a figure of 0.2%. So that follows on from some Zoopla data yesterday, which showed that the number of houses coming onto the market is its highest level in 8 years. Most of the press reports seem to suggest that increased supply would keep a cap on house prices, which may or may not be the case. But at least it is confirmatory to Alistair Stewart's view of what's going on in the housing market. He was talking to us a few weeks ago. So
yeah, no, the market's certainly active, and it's not died in anything like the way that a number of commentators had expected. So no, Alistair's been right on that one, and it's good to see activity steadily building. Yeah, if you pardon the pun.
Exactly. And finally, the other thing I just noticed reading the paper this morning, and I haven't looked at the detail, but there's a Lloyds Bank Business Barometer Index where it was reporting that confidence had climbed to its highest level since November 2015, so nearly a decade. And it was up 8 points to register 50 in May of this year. So I'm assuming that this survey has some relatively high degree of credibility, given that Lloyds Bank puts its name to it.
Yeah.
But to show that it's only just reached 50% and it's been there for nearly a decade, just shows you how the sort of misery index out there, I guess, of business confidence in the UK, and that we are really recovering from quite a low level of expectation here.
Yeah, no, it does. It's felt like a difficult decade. That's true. You said it's gone from 42 to 50. That's a massive bounce. Okay, well, long may that continue, or even move into above 50 territory. Just imagine.
Yeah, indeed.
That'd be something. Okay. And what about company news in the UK? Anything caught your eye?
Well, worthy of note, we had full year results and a Q1 update from DP Poland. And we've both chatted to Nils, the chief executive of DP Poland, previously, and I think impressed by his operational capability. And they were stating that the high volume mentality that he's driven into this business in the last couple of years is continuing to show real results at the operational level. And system sales for 2023 were up by over 25%, and then continued into Q1 of 2024, where they continue to see well into double-digit overall system sales growth, approaching 20% year on year. So he's definitely doing a very good job of compounding growth year over year. And of course, following the recent equity raise, which I know Progressive has commented upon, it has plans now in place to open 35 new stores in Poland on a base, I think, of around 116 was the number I last had in my head, at least. So 35 new stores in Poland, 2 more in Croatia, several store refurbishments and increasing production capacity at their commissary. It does seem to be developing into a very interesting situation, I think, given that Poland continues to be one of Europe's fastest growing economies.
Yeah, it's a strong economy and certainly a strong story. And it's good to see that strength is continuing seemingly into the first part of 2024. So, yeah, great to see.
So what else have you been looking at?
Yeah, we've had a few other bits of news from some of the Progressive clients. We had Petrometad earlier this week, a Mongolian oil and gas business. They received some local approvals for their operations out there, or for some of their operations out there, which was very, very well received. Strong share price reaction. Great to see, because they've been waiting for that for some time, but good to get that through, and the market responded very positively. We also had some annual results from Turn, the investor in Internet of Things, privately held businesses, and they had some pretty positive updates from some of their investees as part of that. They've had some of that news during the course of the year, but they're seeing some decent KPIs and metrics coming through from their portfolio of companies. And then we also had a note from George on TinyBuild. It's a game software business, one of a number of those companies that suffered over the last couple of years as that industry has transformed quite dramatically in terms of the metrics and the way that the big players are allowing the smaller guys to act or not act. But it's a very interesting note. I think there's a lot of reasons to believe that both the industry might be beginning to bottom out, and certainly in Tinybuild's case, there's some good reasons to believe that they're turning the corner also, and there's some good activity coming through there and opportunities for them as we move through 2024 and beyond. So interesting note there. So yeah, quite a busy week in terms of the UK corporate landscape, both in terms of number of results and, as we were saying earlier, starting to use the market properly again. So it's good to see it getting back into its stride, arguably even before many of the reforms that people have been talking about or demanding, they haven't even happened yet. And the market's showing that actually, as you said, it wasn't dead, it was just resting.
Yes. There seems to be just a much better feel around the confidence, both from investors and management teams of smaller listed companies in the UK. It stems from the fact that where there previously was no liquidity, there is now liquidity. And I think it's proving many of the concerns around our markets were cyclical, not structural, albeit that doesn't mean that the structural changes aren't necessary.
No, that could still be very useful, but at least the market's beginning to sort of engage in a bit of self-help. So, if we can get those reforms or changes, that hopefully will make it even better and make access to capital even more efficient. So yeah, fingers crossed for that also. What about next week? Anything major on the horizon?
Well, the big news next week's going to be about European rate decisions. We've got the ECB rate decision on Thursday, which we're expecting to see the first rate cut from a major currency bloc in this interest rate cycle. So that's the expectation anyway. So we'll have to see what that brings. But that hopefully will be the first in this cycle, with the UK to follow not too soon afterwards, followed then by the US sometime later this year. But for the other piece of news this coming week is going to be jobs data from the US, where we get the JOLTS survey on Tuesday and the more significant non-farm payrolls on Friday. So I guess the people there will be looking for further evidence of a slowdown in the US economy. So we get the unemployment rate and non-farm payrolls, which people are going to be looking at.
Okay, that's great. But yeah, the big number next week will be hopefully a European interest rate cut, which hopefully, I'd imagine, quite well received by the news and by the population, especially if it's accompanied by commentary about the potential for UK rate reduction in the future.
Yeah.
Okay. Good stuff. Thanks for that. Look forward to catching up next week, and we'll speak then.
Okay. Speak then.
Thanks a lot. Cheers.
Bye.
Brought to you by Progressive Equity.